and then I'm about to see if I can call Abel. I meant Carter. Pull this.
Yeah, I just hit up Able. I don't know what you said.
No, it's all good. They'll just have to join late then. Hold on, pull this up.
You gonna go to anywhere after this?
No. I actually
Are
got
you
time
chilling?
today, so yeah, I'm not in no rush. All right, bet. I'm about to just get started. So I'm gonna start off with you. And honestly, this is good for you because now you get to take one-on-one advantage,
Like,
or you know what I'm saying. You can treat
yeah.
this like a one-on-one. Oh, let me pull this up real quick, man. All right, bet. So, last time, you remember what we talked about? You want to just go over a review on that real quick?
From the last class that we just had.
Yeah.
Let's see. Let me go to
So we were talking about like the the four stages of market conditions,
oh,
right?
oh yeah. So basically the four market conditions would be consolidating. It could be in a consolidating market, and then there's a reversal retracement, and as well as reversal retracement expansion. So we have those four market conditions.
Okay. And then
But usually, you should. Okay, I'm not gonna go too much in depth with that.
no, it's okay. I'm gonna ask you some questions, and then you just answer them so that we can kind of understand how much you're like able to retain so far. So
Okay.
what is happening when a market is consolidating?
It would be like it's orders are basically being built up to shoot in a certain direction, whether it go bearish or bullish. So it's like you say, shaking a Sprite bottle. It's just giving it more pump. So just like it's like a whole bunch of buyers. So it's just
Okay.
busting up orders. Does it to me it makes sense. It's
No, I get what you're saying. So one thing that helps me a lot too, whenever I'm explaining something, I try to just explain it in the least amount of words possible because from there it's gonna force you to be able to make it short and concise. So when you're when you're over explaining something, that's when you can sometimes start confusing yourself or the person who you're talking to. So I would just keep that in mind when you're trying to like answer some of these questions because you'll even see it will challenge yourself to kind of quickly just assess what you learned and then throw it out in a way when somebody can just quickly understand the concept. So that was a good explanation. So visually, how would you be able to identify it? So
visually would be knowing if the market is if there's no real highs and lows, it's just staying in a steady pace. So it's bouncing off of. I look at it like the heart meter. Like it's just staying in one steady range, it's going up and down, up and down, up and down. But it's not breaking any highs and not breaking any lows. It's just staying relatively steady in the same kind of like triangle box.
facts. Okay, so now we got consolidation. So name me a second one.
Uh, Retracement.
Okay, so tell me the significance or what does it mean when prices were tracing? Explain to
I
me.
know that it
Explain
means
to me what a retracement is basically.
okay. So a retracement would be if when price is going a certain direction. So the example I'll give you now would be price is going up. So it's going bullish and it's going up, then it drops down a little like price and like while price is going on, it'll drop down a little bit and like tease and come down to like a 50 point mark and then go right back up. So when price goes up, then drops, then continues to go to that same direction it was originally going. So the example I said it was going bullish, so it was going up, then it comes down a little bit, then continues to go up.
Okay, so let's do it like this. I'm gonna stop sharing my screen. Share your
Oh,
screen.
you weren't sharing. Oh, I didn't know you. I don't think you were live.
Okay. I was about to say it should be up and running now. What I would say is go ahead and share your screen, pull up a chart, and then I'm gonna ask you about these other conditions, and then let's see you be able to identify and explain what these conditions are meaning or how to interpret what we're seeing. Okay.
Okay.
And then you can pull up any chart. It doesn't have to be. Matter of fact, pull up S&P 500. We'll do that.
Yes, actually. I think I have. Let me just go ahead and share my screen.
Yeah, I can walk you through it.
Make a selection. Share further.
Cool.
All right, so this is. You can see my screen.
No. Pull up. Oh, that's me. That's me. Wait, this is trippy as fuck.
No, this is my screen. I'm watching my stream, but I don't know. I can't tell 'cause I'm switching tabs.
Oh yeah, you're pulling up Discord right now. Pull up Trading View.
Yeah, you can see this.
Nah, it's still on Discord.
If I hook my monitor up, it's probably gonna work. I'll be able to choose. Hook the monitor up.
Or what you could do is just share your entire screen and just pull up Google Chrome.
Yeah, I thought I did that, but I guess I'm gonna do this. Now you should be able to see it.
Okay, yeah, I can see it now. All right, so clear your chart. So take off all the drawings on it. Okay, and then click a blank area on the screen and type in SPX. Or actually, type in gold. Yeah.
Like over here?
Yeah, type in
What are you
gold.
saying?
Yeah, type in gold. And then just click on. Yeah, that's good. Okay, and then go to the 1 hour. And then right click and then hit refresh chart view. Yeah. Okay, cool. So show me a consolidation that's on your screen right now.
I have to move around, or
Yeah, just
you want to be.
yeah, actually keep it draw back to where it was originally. Right there. Okay, leave it right there. And then make your candle like grab the Y axis and drag it up a little bit. So I can stretch out a little bit. Yeah, and then in the center your screen now. Center all the price action in your screen. Yeah, there you go.
Like this.
Yeah. Okay, cool.
Okay.
So point out to me a consolidation and tell me what price is doing right now. Like talk me through it.
I'll point out a consolidation.
Yeah.
I'm gonna say either right here or I'll say right here and right here.
Okay, so that's a good example of a consolidation. Also, you see where your crosshairs are. All of that
Yeah,
price action
right.
going to the right. So after that red candle drops down, you're gonna see price go back and forth, all the way.
Right here.
Yeah, so that whole horizontal movement right there below your cursor, all of that is consolidation too. Anytime you see price ping pong within like an invisible range, so yep, move your cursor along all of that. Yep, that is also a consolidation, right? So anytime you see price bouncing back and forth, it doesn't matter how long it does it, how short it is, what time frame that you're on, that is considered consolidation. So explain to me what price is doing in that consolidation range that your mouse is hovering over.
Okay, so price just came down off of expansion.
Okay.
it's it's as it really isn't. I don't know. It's okay. So you want to say there's
So, for example, if you were to show somebody
like
this chart
okay.
and they were to say,
This
what is
right
price
here,
doing? I
right?
want you to be able to explain it, right? So, just use the words that we've been learning. So, use the words like
Okay.
consolidating, retracing, reversing,
Okay.
or expanding.
Okay. So price consolidated right here.
Uh huh.
Then it went to a bearish consolidation as it came down to where my mark is now.
So, I'm gonna stop you right there real quick.
Um,
So,
okay.
you started off good, right? But that red candle would not be a consolidation. So, when price
This
breaks
one.
out, yeah, when price breaks out of a consolidation range, what is it doing?
Price breaks out of a consolidation.
Look at your notes and see what definition lines up with what you're looking at, based off that one red candle that your mouse is over.
You said it was an expansion, right? Because that's what I said earlier.
No, you said consolidation, so it is an expansion. So anytime price
Oh
breaks,
yeah, yeah.
okay.
Oh, okay. I'm tweaking. So right here, it's not consolidating. Is that what you're trying to tell me?
No, that is a consolidation, but that long red candle
Okay.
going down is an expansion. That's not a consolidation.
Oh, I meant to say expansion. Nah, that's a dumb error on me.
Now you good? So
Okay.
go ahead and start over.
Okay. Okay. So I was saying right here, price was consolidating. Then it went down to a bearish expansion, and then over here, price was I guess going up. Then it retraced, and then it continued to go up. Then price retraced again. Then it went up. Um, then it went bullish. I would say. Then it went bullish. Then right here, I don't want to say it reversed. It just price went up to here, then came down. This is where I would be stuck.
So is price that price range that you're going through right now? Is it showing you a clear direction, or is it just going back and forth?
It's showing me clear direction. So this would be a reversal.
So we're gonna use look down at your x-axis. So between 12 p.m. and between both 12 p.m.s, right? What is price doing?
Consolidating.
Okay. So one thing I want you to do, drop a vertical line between the consolidation, so I can see the entire consolidation range.
Right here.
Exactly. So yeah. So that's all you would have to say. So an easier way to
Okay.
describe this, all you gotta say is from where you started last time. Price consolidated, it expanded bearishly, and then it moved into another consolidation, and then after that, what did price do?
Price reverse.
It expanded, so it continues to go down.
Expanded. Okay. Okay.
So
okay, expanded. Never mind.
for it to reverse, you have to find a liquidity pool that it took out first and then change directions. So now you would want to find a significant swing low that price violated before going back up.
Okay. So with this would be a reversal. Is that what you're trying to tell me?
Not really,
Or
but
no? Okay.
we're gonna cover that today.
Okay.
So stop sharing your screen. We're gonna go over this today. But it's gonna be a lot easier if you guys continue to review this stuff on your own time, because when I start explaining it, we can move faster through different concepts, and then you guys will be able to learn more. So let me pull this up
Okay.
here for you. All right, you can see my screen.
Yeah.
Bet. So today we're gonna go more in depth about liquidity, right? Abel, looking at your notes, what does the liquidity mean, or what does it signify when we see it?
It's breaking past the lowest low or the highest high.
So, if you were to define liquidity, how would you define it? Because I gave you guys the definition last time. It should be in your notes.
It says, would it be? Is it like?
I was about to say, if you need
Is
to,
it with like something to do would have something with imbalances, like locating imbalances, or?
No, not really. So one thing I need you guys to do, if I'm gonna go over these concepts with you guys, I need you guys to be able to have some form of organized notes, because a lot of this stuff I'm asking you guys, I have already gone over multiple times. So I want to make sure I'm not wasting my time or your time going over things that we've done multiple times already. So one thing that will be good is either get you guys like a section in your notes app, or maybe like a spare notebook, and make sure you guys are writing down the stuff that I'm putting on the screen, because everything that I have asked you guys to answer, I have already either put on the screen or I've already answered multiple times. So I want to make sure that you guys are able to keep up, so that we're actually making progress and not consolidating in one stuck area. Make sense?
Yeah.
Bet. So I'm gonna go over this stuff again. Make sure you guys write it down, because it's gonna help with you guys learning. If you guys just sit here and listen to me yap, you guys won't be able to retain anything. So you guys need to be able to have it somewhere where you can refer back to it. So then by the time we start up our next session, we're actually making progress. Okay. So I'm gonna just start over from scratch. Liquidity is gonna be one of the four. Or I'm sorry, let me start over. Liquidity is literally just buy and sell orders that price is looking to eliminate or to negate, right? So let me write this down for you. Buy and sell orders that price is looking to. I'll just put eliminate, make it easier on y'all. Okay. So last time when we talked about liquidity, we spoke about how when you see a liquidity, your brain needs to start thinking about what market condition, right? There, out of the four, which one does this lead into? When you see a liquidity, you need to be thinking what? It starts with an R.
Reversal.
Yes, sir. Exactly. Put it like this. Exactly. So anytime we see price eliminate a sell or buy order, our mind frame needs to flip into a reversal state, right? So the way that we are able to identify where these previous buy or sell orders are resting, they're going to be in forms of recent swing points in the market. A swing point is just when price changes direction, right? So for example, price went up here, and then this swing point made it go back down, right? And then this swing point here, it turned price right back up. This swing point here, it turned price right back down. So if we're just keeping up with the same pattern, when we see obvious changes in direction, these are what we classify as swing points, right? So boom, this is in the forms of highs and lows. So whenever you guys say price swept this previous high, that is a swing point that got taken out, right? So I'm gonna write this down for you guys too. And then if I'm going too fast, y'all let me know. So a swing point is just a recent high or low where price changed direction. Bet. So now that we understand that liquidity is going to be resting at these swing points, right? So one way to be able to identify it, you just want to be able to simply identify a high or a low, right? So for example, we'll use this consolidation point right here. We can see how we have this recent low right here, okay? So this swing low, after price had went up, before price had then came back down and eliminated all the buy orders that were resting right here. So just to give you guys the logic behind it, When people are trading anything at all, one thing that they do is that they use these swing points as areas of either resting orders for buy stops or areas where they put their stop loss, right? So all liquidity looks to do is just to eliminate or negate people who are currently in profit, right? So for example, there's people who were buying down here, and as price is moving up across our screen, they are moving in a net positive direction, okay? So as people are watching price go up on their screen, they are trailing their stop loss below these lows so that they can protect their earnings that they started from back here when they first initiated the order. So as price is going up, price understands people do that, right? So when price comes down and snags right past these recent lows, they're taking out the people who are net positive from back here. Okay? This is how they stop other people from making money. So this is what we call a liquidity run or a stop run. They're literally looking for stop loss or stop hunt. So these terms are all interchangeable. They are just moments when price seeks to negate other people's accounts. That's literally it. And the way that you are able to identify these liquidity zones or these targets are just recent highs and recent lows. Okay? So now that we had and let me mark this up, right? I think it'd be easier if we do that. So this right here is this a high or a low? Anybody can answer. This point right here.
So
okay.
A low.
So if somebody was bullish, what would be here? A sell stop.
Their stop loss.
Exactly.
Yeah.
So when price understands that, they understand this is the area that they need to trigger in order for them to be able to take somebody out of their current position, right? Think of it kind of like a trip mine. So you guys know how in those action movies when people are running away from the bad guys and then they're running through the forest and then they hide in they're hiding in the cabin, right? They booby trap the cabin. So they're going to put a trip line. So when people walk past at a certain point, they're going to get blown up or the blade from the ceiling is going to swing down and chop them in half. You know what I'm talking about? It's literally the exact same thing. They do it all the time in Home Alone. So essentially these are trip lines for price, right? So when people set their stop loss or their sell stops and stuff underneath these lows, it's a trip line for price. So once price crosses this threshold, then it's going to cause this action, whether it's going to close their trade or it's going to push them in the market for a sell, but then price reverses and now their trade is wrong and their account's just continuously going negative. So that's exactly what price is seeking. It's seeking these trip lines so it can essentially fake out the person who has that trip line set up. So let's draw it out right here. So understanding this recent low, people are going to set a trip line or their stop loss right beneath it. Notice how price, it goes directly underneath. It just bumps this low, right? And boom, right here. So this section right here, I wonder if I can use a different shape. Maybe like a star or something. Yeah, we'll use the X. So boom, price is gonna come all the way back down here and knock them out, right? After I knock them out, they're no longer making money. So now I can continue in the direction that I was gonna go in the first place. So boom, price is gonna knock out. Can I make this smaller? No. So boom, price is gonna knock out these recent lows, and I understand price, because we're already bullish, it's going to continue to go in this direction. So you can notice how when price came down, it reversed. So it was bearish. After it took out the sell stop, price then reversed and continued to go bullish. Am I making sense?
Yeah, but in this scenario, if you put in an entry at that yellow circle and we want to avoid getting taken out of a trade, would you personally, would you rather lower the stop loss or just be patient and wait for a better entry?
So what you would do is you would not take a trade here, right? So the reason why is a smart person, you're going to learn this over time, a smart trader, they're going to wait for that liquidity sweep. Once that liquidity sweep takes place, we now understand price is most likely, or there's a higher probability for price to want to reverse in this given direction. Notice how right here, price respected this previous low. So if I were to draw this low out right here, notice how that yellow line, it didn't go through it like that, right? It was very tiny, but notice how this one is more dramatic. You see how it made sure it took out these people down here. These are what we call relative equal lows, right? And actually, if we look at so you remember how right here at the very top, it gives you the value of the price bar that you're looking at. So I want you to look at how close in price these two areas of the market are, right? So the low of this candle right here, or the lowest point of this swing low was 19,749.50, right? The low of this one right here was $19,739 even. See what I'm saying? So these are still relatively equal. Whenever you see price that looks fairly too smooth, that's how you know that's an area of liquidity as well. So for example, if let's say I was trading this right here, this would have been a target for a TP if I was bearish, because I see relative equal lows, right? So anytime something looks like that juice box fade that I referred to last time, anybody who got that high top fade, they're gonna be a target, right? So if it looks too even, it's most likely gonna be a target, right? So understanding that, once price liquidated this short-term low or these relative equal lows right here, my brain needs to start thinking about a reversal pattern, right? And this is where that market shift comes into play, but we're gonna get into that a little bit later. I don't want to do too much too soon. So now let's find more examples, right? Boom, here's another one. So this is another sell stop. Let me word this correctly. This is another example of sell side liquidity that made price reverse and go bullish. So these relatively equal lows right here, right? If you were to just glance at them, they look fairly equal. So what you would do is you would mark up the lowest point of those relative equal lows, and then you would draw it out in price, or you would draw it out to the right. Okay. Notice how this relative, or this low point right here, make that smaller. This low point right here, price violated it, right here. So let me pull up that X again. Price violated this low. So it took out everybody that either had a sell stop. A sell stop is just a type of order that you can use to trigger a live order into the market. So basically, it's like setting a trip. It's like setting a trip line, except for you to go short. So a buy stop is like catching a bus stop, right? So let's say I set a stop or a buy or sell stop right here. That means once price crosses this point, I want price to push me into a sell. So at this point, I'm expecting price to continue to go bearish. But the algorithm understands that's how a lot of people trade. So they're going to trigger that sell stop. So now people think price is going to continue to go bearish, but in actuality, it's going to reverse and start going bullish. So now, after they put their order into the market, they're just draining their account the further in the opposite direction that it goes. That's why, as a smart money trader or somebody who trades ICT, you want to be able to wait for these sell stops to get taken out first, and then start looking for your entry to go bullish, right? So there'll be times where you can kind of jump the gun and get your entry right here. This is what we call like sniper entries, but I don't want you guys to focus on that right now. I need you guys to be able to just understand these basic concepts so you understand what to look for, okay? So again, price came down, liquidated this low, and then it did what? It starts with the R word.
Reverse.
Exactly.
Reversed up.
So anytime we see liquidity, we need to associate what with it?
A reversal.
Exactly. So now you guys are starting to pick up on it, okay? So now this is what we call sell side liquidity. So let me label it. Actually, it'll be easier for you guys to learn. So sell side liquidity just means price took out the sell side. So if your liquidity is from a recent low, it's going to be a sell side liquidity, okay? Now, if your liquidity was on a recent high, just using logic, what would it be? Sell side or buy side?
Buy side liquidity.
Bet. So now let's look at some other examples of buy side liquidity, right? I want a clear one.
Can you scroll back to your definitions real quick? I didn't finish writing those down.
Yeah, make sure y'all have these down because it's gonna make what I'm saying. It's gonna help you guys understand what I'm saying a lot easier. And I'm gonna keep okay, but I'm gonna keep giving y'all more examples too because I really want to drill this concept in your head. So if you guys are able to have this concept in your head, you guys will be able to understand what's happening in the market a lot easier, right? So here's another example, right? Here's a short-term high. This is what ICT calls like a turtle soup. Basically what that means is the most recent high gets taken out and then price reverses. So let's put it up like this. Boom, right here. So this high right here, this high right here, notice how it gets violated on this price run directly to the right. Okay, price goes directly above it. Price goes directly above it, and then does it continue or does it reverse? What does it do after it bumps that high? Anybody can answer.
It reverses.
Exactly, right? So let's find another example. I want to find a clean one. I want an example that's just going to jump out at you. I want a buy side that goes south. Oh, I'm tweaking. There's one right here. Okay, here's another form of it, right? So this recent high, price came through and violated it. And then after it violated it right here, did it continue going up or did it go down? Did it reverse? I'm sorry. Exactly, right? So I'm trying to get it. I'm trying to be in a habit where I'm using the correct lingo because I want you guys to be able to understand what's going on, right? So when price bumped it, then it reversed. If you guys open up the Discord, actually keep looking at my screen. I'm gonna show y'all where it is. If y'all look at the Discord, go down to the Tonka Truck University chat. I actually dropped a PDF that has examples and definitions of everything that I have been going over, okay? I found this on the internet the other day. I feel like I've sent it to you guys before, but it's probably like a few months ago. But this is a very good resource to use or to refer back to really make sure you guys are understanding these concepts correctly. There are examples I actually wanted to show you from this workbook that are fairly clean. And I think it would help you guys with your understanding. So, right here, if you go to page 17, it's going to show you guys an example of buy side liquidity, right? So it's basically the exact same example that I went over last time. So you have a recent high, price comes down, comes right back up, and violates that previous high. So anybody who had their stop loss resting right here, about to say, who the hell slamming their door, bro? People who had either like their stop loss right here or a buy stop that would trigger price to continue to go, or a buy stop that would oh my fault, I can't talk. A buy stop that would trigger their account to be in a buy at this point because they assumed price would go up. They're now negative or they were taken out of the market. Price then reverses and drains their account. Okay, so this is a good way to understand how to find liquidity, right? So previous swing points in the market, price is going to look again to violate it and then reverse in the direction, right? So again, here's another sell side example. Price is going to bump this previous low, and then we need to be expecting a what, Benny?
A reversal over there.
Yes, sir, ski. And you see how aggressive price moves after it takes out these highs, right? So this is very key. The reason why I want you guys to understand this is how. Remember when I flipped that account from $250 to like $20K in a week? This right here was my bread and butter. Oh my goodness. I cannot tell you how many times you can find yourself a sniper entry just by being able to accurately find liquidity points in the market and pairing it with time. Using those two things alone right there, you can be profitable, because I've done it before. So that is a great way to get sniper entries. When you get sniper entries, that is basically just referring to getting a entry that has very high reward with very little risk. That's basically all the type of trades that people want to get. But understanding stuff like this, it's gonna really open your eyes to the opportunities in this market, because when you get good at being able to understand what you're looking at, it's hard to unsee it. And that's the point that I want you guys to be able to get to, because then you'll start understanding with high probability where price is looking to go. So, like I said, when you see these recent highs or these recent lows, you want to target them. But the other version of that is going to be areas where price is too clean or it looks relatively equal, right? Because I understand when I see these relatively equal highs or these relatively equal lows, people again are either going to have their buy stops here, their sell stops, or their stop losses placed in this area. So by understanding that, I was like, okay, cool. If I see any type of equal area in the market, or if I see a significant high or low, then I need to understand I need to target that area for it to be either a TP, like if you're already moving in that direction, or you're going to use that to get in the market because it's going to reverse and go the opposite direction. Am I making sense?
Yeah.
See.
Okay, so here's a buy example or an example of buy side, buy side liquidity. This is an example of sell side liquidity. So you see how like it's too clean, bro. Like, you know what I'm saying? Prices want to come down and violate it, and after it does that, shit going, you know what I'm saying? Sprint off in the other direction. So it's basically like, you know how that Dave Chappelle meme? He like, gotcha, bitch. That's basically what the price is doing. I'm not gonna lie. Like, actually verbatim, that's exactly what price is doing. So when you understand where price is gonna do this, it's gonna give you so much more power and more leeway in the market, because you're gonna be able to understand where price is doing it or where price is going and why price is going there. When you're able to understand the why or the logic behind what is happening, that's when you start to become dangerous and you start snowballing in the right direction. Because understanding this, you're going to be able to have this understanding like, okay, I'm going to be patient and wait for price to violate this area. Once that happens, that's when I'm going to start hunting for my setup, or that's going to trigger my setup. So there's different ways you can trade into it, but I really want you guys to utilize this PDF because it's going to help you identify. It's going to help you guys identify these areas in the market. So before I keep going forward, what I want to do is I'm going to stop sharing my screen, and I want you guys to get some practice in understanding this stuff for yourself. So let me get out of this. Let's go Abel. Let's go 2 first. Let me stop sharing real quick. Oh shit. Hold on. My fault. I ain't mean to leave. Okay, cool. And then Abel, pull up your chart, and then show me an example of buy side liquidity where price reversed, and then sell side liquidity where price reversed.
Give me a second.
All right. Well, while you getting ready, we can have Benny go because I know he got his stuff up already.
Yeah, I just share my screen.
I'm live now.
Oh, all right. Never mind. Hey, Abel's good. All right, cool. So pick a different. Go to US30. So pick a different chart. I want you guys to do something completely new that I'm not doing, because I want you guys to see just how these concepts translate to all these other pairs. And then go to the 1 hour. So the reason why I'm having you guys use these higher time frames in order to show me examples is because these candles, they're gonna represent more data, so price is gonna look a lot cleaner. It's gonna be easier to identify. Okay. So when I tell you guys use like the 1 hour, 4 hour, 15 minutes, something like that, that's my reason why. But all of these concepts are going to be able to trickle down to every single time frame. Okay, so show me a example of a buy side liquidity sweep and then price reversed and went bearish. Just the first one that stands out to you.
Like this right here.
Okay.
One.
So let's mark it, and then talk me through it, because I want you to be able to use the correct terms with each stage of the liquidity sweep. So be like, okay, this is the high that got swept. This is the liquidity run that got taken out, and then price reverse at this point. Like, I want you to be able to say it back to somebody as if you were trying to teach them.
I want to say these are highs.
So where is the highest point in the range that you are highlighting right now? Is it that green candle or the one next to it? Which wick is higher? So you always want to go to the highest wick that price violates before it reverses.
This?
Yes. And if you have trouble identifying how to mark it up, refer back to that PDF that I put in the chat, because that's going to be a good resource for you to be able to be like, oh, okay, I see the levels that he's referring to, for me to be able to find it myself. And the cool thing is you can actually download that on your phone as well. So even like if you're on the go, you want to glance at it, you know what I'm saying? That joint definitely help.
So this is the high that swept.
So is that buy side or sell side liquidity that you just highlighted?
Side.
And why is it buy side?
Because it passed the highest point, the highest wick.
Okay, yeah, you're moving in the right direction. So one thing I want you guys to pick up on, all these terms that are being used to describe what's happening, it's just fancy words to describe very basic movement. So if I ask you something like, is that buy side or sell side, and then I ask why, you can literally just say because price violated the high of the wick, or because this is the high, or something like that. Like, it can be very basic, you know what I'm saying? Like, this ain't science for real. So you guys can kind of consolidate or really dumb down your answers. And I was saying this to Benny earlier, when you get good at reducing the amount of words you use to describe something, it becomes more efficient to somebody who has never heard this before. So, for example, if I were to teach you guys something, you guys would grasp the concept easier if I'm able to find ways to condense my wording, because it's less to take in. Sometimes less is more. So I want you guys to get in the habit of being able to regurgitate information like this, because even when it comes to you describing other things in life, you'll be able to help someone who is a rookie have a strong concept on it. So, for example, if I ask you, okay, is this the high or low? It's the high because it's the high of the candle. That's all you got to say. You know what I'm saying? Like, oh, okay, high, buy side. Okay, they all correlate. So then, go ahead. I'm gonna let you continue to explain. So price violated that high, and then what happened?
And then it reversed.
Okay, so highlight the point where price violated that high. Yeah, I know it's a little trippy trying to work that circle.
Yeah.
Hit the smiley face if you want to use the X. Yeah, there you go. My nigga got emojis. That's crazy. Yeah, I'm about to say, mine ain't have all that, bro. You can just put whatever. I get what you're trying to say. Bro can use the mad face. Yeah, because everybody who had orders right there gonna be mad as hell. Nah, exactly. Okay. And then price reversed and went bearish. Exactly. So I want you to get more practice with this. So find me another example of buy side liquidity getting taken out before price reverses. So practices like this is really going to help you guys with your understanding, because even when I'm not on the chart with you, being able to identify these patterns by yourself is going to give you more confidence when you're looking at a live chart. So yeah, keep scrolling. Wait till I want you to practice looking at examples that just stick out to you, right? So when you're able to identify these basic examples, it's gonna help build you into the direction of finding these more intricate versions of what we're talking about.
These are relative equal highs.
Okay.
So that's going to be our. No.
So I actually want to give you some credit here before you delete this. I want to give you props for being able to identify those equal highs, because yes, that is a form of buy side liquidity. You are correct in that. The only part about this that is not correct is the fact that price never violated that and then reversed. You know what I'm saying? So
yeah.
So you're moving in the right direction, which is good, which means that you're starting to pick up on it. But you can find a better example. There's actually one right there on the chart. There's actually multiple right here. So
Good.
Hey, pick whatever is easier for you to describe.
Awesome. Okay.
Okay. Is that buy side or sell side?
This is the buy side liquidity because it is a high. It's high on the chart.
Okay. And then at what point did price violate it?
Right there.
Yes, sir. I need that soundboard when it was like hoes mad. Yeah, that's what I need. All right, bet. Now, show me a sell side version of what we just showed. So it's going to be the exact same thing you just did for buy side, just in the opposite direction.
I think I saw one over here.
Yeah, go ahead, cook up then, man. Cook up.
Would this be like a relative low? Or like a recent low?
Yes, sir. Now you cooking. Yes, sir. He going crazy. Everybody drop the horns for my boy.
Nigga rubbing his hands. I know he needs some lotion.
Yeah, okay. So is that buy side or sell side?
So.
And why is it sell side?
Okay.
Because it's a recent low.
Okay, now we cooking. So you starting to see the vision, right? You starting to see the vision. So I want you.
I'm starting to fuck with the reversals and shit.
Bro, I'm trying to tell you, bro. Like when I'm telling you, I went from $250 to $20K in 1 week off of this, bro. Like I'm telling you, this. Do you not see the level of? Okay, before you keep going,
I hold you.
That's what I'm saying. That's what I'm trying to tell y'all niggas, bro. Oh my goodness, bro. For the longest, I've been trying to tell you, I'm like, bro, if you could just spot liquidity, that right there will flip your account. Like, I'm telling you, be able to spot liquidity, that right there is gonna change your trading so much, bro. Because if you're able to find a point at which price is gonna violate before it reverses, bruh, you can be looking at that broker like, run me my money. You know what I'm saying? That's exactly how it's gonna be. So yeah, so exactly. So price violated that low, and then it reversed. Okay, so now show me another example. Like I want to drill these concepts into your head because it's super important.
This is the recent low from. Oh no. This one.
Yes, Sirski. Now you doing it right. Go ahead. And I want to give you props, bro, because like I'm glad you changed the low that you're referring to, because look at the reaction that you got off of that level. You know what I'm saying? So this is good because the reason why it's so important for you to be able to go back in history and to be able to see when it happened is because going forward, you'll be able to have a stronger understanding of what to look for. And then you guys are going to build this association in your brain that like, boom, when I see this high or this low get violated, then I need to be looking for this reversal. You know what I'm saying? But now keep in mind, there are other factors that we're going to pair with this, but this is the foundation that I want you guys to start building upon, because this is going to be like the start for you guys to understand, okay, bet, like my model is about to like present itself. So one thing I'm going to show y'all is like, just because price takes out a low does not mean every single time it's going to violate. Or I'm sorry, it's going to reverse. Now I'm going to show you guys going forward how to be able to identify when that reversal is confirmed or it has a higher probability of reversing versus when it's just going to continue going in that same direction. But we're going to get to that point a little bit later. So give me another sell side example. Just one more. And then I'm going to move on to Benny. Oh, yo, what's good, bro? I'm just not seeing your comment. Nah, the Discord is not private. If you go to the Instagram page, you'll be able to find the link for it, and you can join it for free right there.
I mean, this one could be a stretch just because it's like so far apart.
So one thing I want you to keep in mind, or one concept to kind of keep in mind, when you're doing liquidity, or when you're first studying liquidity, you want to look for areas where it violated that recent high, that recent low, and then price took off in the opposite direction. So, for example, if you look at, keep it right there. If you look at when price violated that low that you first highlighted all the way to the left, notice how price didn't really reverse. All it did was it retraced and then it continued in this given direction. Now, again, I'm going to show you guys how to be able to pair all this stuff together. But starting off, I want you to use examples where it's very clear price went above or below a recent high or recent low, and then it changed directions. So find me, like you can find. Oh, matter of fact, just do what's on your screen right now. So there's literally sell side liquidity right there that you can highlight.
Right here.
The lower one.
1 hour, never mind.
Hey, yeah, I was about to say, go ahead and help him, Benny.
I was gonna say, were you talking about on like you see like the big that green wick a little bit more to the left?
Yeah.
You talk about that low right there, right?
Mm-hmm. So notice how price went just below it. So it bumped that recent low, right? That swing low got bumped. And then what did price do after it did that?
Yeah, one bad.
Shawty running like a track star. She gonna run away when it get hard. You know what I'm saying? She gonna hit the Usain Bolt on their ass. That's why it's like when you understand that, yeah, hoes mad. Man, let me download that actually. Let me go ahead and do that. I feel like I'm gonna need that. So yeah, every time that low get violated, it's like, oh, okay, bet. I know what to be anticipating, right? So if I'm able to anticipate it, then boom. This is gonna be very key because whenever you have a target set in mind, the trigger for you is going to be a liquidity first in the opposite direction before running to your target. For example, in this particular, in this particular scenario, right? Let's say I'm expecting price to be bullish. A smart person is going to wait for a recent low to be violated first, and then price to continue to go in the direction that you had originally thought, right? Because by doing that, you're going to be able to reduce your risk and maximize your reward. This is how you will be able to consistently keep yourself profitable because you're reducing the amount of capital that you are putting in jeopardy. So having these practices is what's going to keep your account alive. Now we're going to pair it with proper risk management, right? Because there's going to be times where you're wrong, like we're humans. But it's good for you guys to be able to see these patterns because just like almost anything in life, there's a pattern to it. And once you're able to recognize it, that's when you start becoming dangerous. All right, bet. Good job, Abel. So Benny, it's your turn. So stop sharing your screen. And we're gonna let Benny pull up some examples. I'm gonna need both buy side and sell side examples of liquidity.
Can you see?
Give me a second. Yeah. So yeah, you're on the 1 hour. So find me an example of some buy side liquidity and sell side. You can go whatever first. It doesn't matter. Whichever just stands out to you the most. Just start there.
This wouldn't be one, would it?
If you scroll, if you scroll to the right of your chart, you'll be able to see a more visible example.
Oh, to the right?
So I would look at what's in front of you right there and try to dissect that.
Are you saying from here? Okay.
So you're gonna look for a swing point that gets violated before price aggressively changes directions. So one way to help you identify this, look for a very long candle and then look to see what triggered that candle to react that way.
Oh, so right, you saying like right here, this high?
Exactly.
This is the most this the buy side. This is the buy side liquidity.
So mark it up. So
And
I
this
want
would
you
be
to get into a habit of marking up what you're seeing, because it's gonna help you keep track of your progress.
Let's do that. So liquidity. And this would be the swing point. Let me see. Oh, how do you do that again?
Do what?
I was gonna put the swing point.
No, so okay, let me put it like this. I get what you're trying to say, but that candle that violates that previous high that you annotated, that's going to be called your liquidity sweep, right? So your way to identify that liquidity sweep or that stop run, use some type of like emoji or something to put above it. So Abel used the mad face, I use the X. You can put whatever you want. Yeah, that's that green bean. That's the entry. Okay, boom. So notice. So talk to me about what happened right there. What I would do is blow up that section of the chart. So make it bigger.
I did.
Yeah, just so you can like see it clearly. Because when you have clear examples, your brain is gonna embed that. So talk me through what just happened right here.
So price went up to this. Price went up to this is the most recent high, and so this would be where our buy side liquidity point would be at.
Okay.
Price comes in and breaks it. This is the highest. This is the highest way going down. So this would be the. What's that called again? The point. The point. Let me see. This would be the swing point, and then goes down and complete as a long sharp reversal.
Okay. So yeah, I get what you're saying, but let's kind of clean up that wording a little bit, right? So remember, we want to be able to describe something with the least amount of words possible. That's how we're able to give the most concise feedback to somebody. So one way you can clean that up is just by saying price violated this recent swing high, or I'm going to use the terms that we've been learning. So there is a recent swing high right here. Price came up and liquidated this previous swing high and then reversed bearishly. So now I just described everything that just happened right there in about 2 sentences, right? So price violated a recent swing high or liquidated that swing high and then reversed. That's all you got to say. You know what I'm saying? We want to. Our goal is to keep it as simple as possible. We don't want to overcomplicate day trading, because when you do that, that's when you start overthinking and then things start fumbling, right? So good job. Now find me another example like that, and then we'll move on to the sell side.
The sell side.
Yeah. But find me another buy side liquidity sweep first. And I want you to find an example that's clear to you, not one that's like, oh, I don't know if it's this or not. Like, find something that's like, oh yeah, this is definitely it. That's how I want you guys to start off. And if you need to reset your chart, right click on anywhere on the screen and then hit reset.
It's a chart view.
Yeah.
Won't let me go up. Oh, so right here would be a good one.
Yeah, there actually is a version of one, but I want you to find one that's a little bit more clear. That's a little bit more distinguishable. Because this is going to help with your learning. Sometimes if I feel like I'm looking at something that might be there, I can compress this chart horizontally and it'll make it a lot easier for my eyes. So grab the x-axis and then drag it. Yeah. And then it might be a little bit easier for your eyes to pick up on it.
Okay.
So I will go back to where you just were and then let me know if you see something.
So right here, just be going. Right here.
So I will go a little bit further to the left. You want to find a high that gets violated,
Okay.
that price then aggressively reverses. So go more to the left, right there. Yeah. Go to the left. You see where your crosshairs are? Yeah. Go to the left, right there.
Yeah.
So see how that high, drag it to the right. Like put a line over that swing high and then drag it to the right, and you're gonna see how price violated that high, and then it did its thing. You know what I'm saying?
So you told me that you said do this over
Yeah.
here.
Mm-hmm.
Make a point over here.
Is that not a swing point in the market?
Oh yeah, that would be actually, yeah.
So remember, a swing point is a point in the market where price clearly changes direction, right? So not when it's just going. You see how right there where your crosshair is, that it's consolidating right there. It's just going back and forth. It's just red and green, red and green, red and green. You want to select points where price is obviously moving away from a zone. And sometimes stretching or compressing your chart, it makes it easier to identify these zones. So for example, in a case like this, drag your y-axis up and it's going to stretch out what you're looking at, and you'll be able to see it with more clarity. Now you see how, now center that price action into your chart. So now now it's a little bit easier to see how price was going up, and then at that point where you drew out your blue line, price clearly changed directions and went south. See what I'm saying? So we can
Okay, you say it again.
So now that we can see that clear price swing, we understand that when price bumped that high, that's what triggered it. That buy side liquidity then triggered that reversal. So I want you guys to see how all these concepts are coming together. So go back to where you started drawing your blue line. That right there would be a swing point because price did what? It changed directions. See what I'm saying?
Okay. So even right here.
Yeah. So you always want to go. You always want to go to the highest point of that swing point, right? So for example, your line is starting off on the green. I would start it off on the candle to the very right. That's red. Yep, the highest point. So where is the highest point of that swing point? You want to put it there.
Up here.
Exactly. So that would be the buy side liquidity.
Okay.
And then I want you to just study how going to the right, how price reacted off of that swing point that you highlighted. So describe to me what happened once price tripped past that buy side liquidity.
So as
just tell me
right
what you
here,
see.
the price.
Yeah, all you gotta do is just tell me
price
what you see.
Price went up and liquidated our highest point, and then it completely reversed.
Exactly.
Down.
That's all you had to say, bro. W's in the chat. You know what I'm saying? W's in the chat for my guy. You know what I'm saying? Let me get a hee in the chat. No, I'm playing. I ain't so Illuminati. But nah, like you get the point. Guess it. Yo, he be killing me with that. But yeah, that's it. Like, I literally want you guys to get into the habit of just literally describing exactly what you see. Price violated this high and it reversed. That's all you gotta say. You know what I'm saying? So little things like that is gonna help you guys in other areas of life too, because you'll be able to like, what's the word I'm looking for? You'll be able to clearly just explain something to somebody, and a lot of people can't do that these days. So this is actually gonna spill over into a lot of other areas, which is kind of dope. So find me another buy side example, but I want you to be able to do it completely on your own. And again, if you need to reset it, you'll just right click and hit reset chart view. Y'all boys cooking up today though, man. I ain't gonna lie, y'all look keep snapping. I like what I'm seeing. We moving in the right direction. So yeah, again, just look for something that just obviously jumps out to you. So you understand what you're looking for now. Now just find it on the chart. And just keep scrolling until you find it. Don't overthink it. Play a little background music. I might DJ on it bit. Yeah, find me something, bro.
You see anything, Abel? Or my Twitch?
No. Don't help him.
Alright.
Yeah, I want, like, I need you to be able to find this stuff on your own, bro. Like I said, if you got to keep scrolling until you find something that makes sense, then do that, bro. You know what I'm saying? Yeah, sir. Keep scrolling.
That's not.
Nah, you good, bro. Take your time, bro, because I want you guys to be able to understand this stuff. So remember, you're looking for a short-term high that gets violated, and then price aggressively changes direction. That's a clear reversal, right?
Yeah. Short-term high.
Yeah, there's multiple examples on your screen, so just go ahead and pick one.
Alright, so right here we have a.
So draw it out.
This would be our
So draw it out.
short-term high. Yeah.
All right, so talk me through it. You said what happened?
So we have a short-term high right here. Price comes up, liquidates our short-term high, and this would be our market swing going down, and it completely reverses.
Yes, sir. You know what I'm saying? Yes, sir. Yes, sir. Yes, sir. Yes, sirski. You know what I'm saying? Y'all boys going stupid right now, man. Okay. Now find me two sell side examples. So we did buy side. So now show me the exact same thing but in reverse.
I'm gonna just keep going less whichever ones.
Nah, you good, bro. Cook up. I ain't gonna tell you what to do, twin. I ain't gonna tell you what to do with it. Yeah, there's multiple examples you can pick from on your screen right now. So. Scroll to the right. There might be something easier for you to look at. So yeah, look at that right there. Like that whole everything that's on your screen. I ain't gonna point out where it is, but you know what I'm saying. You in the right vicinity. You cooking up. You getting hot. You know what I'm saying. So remember, you're looking for a short-term low or relatively equal lows that get taken out, and then price aggressively changes direction. So yeah, you moving in the right direction.
I want to say this right here.
Okay, so mark it up. And then as you're marking it up, describe to me what's happening.
So this would be. So right here we have our short-term low, and over here this is where our price liquidates it, goes right through it, and swings back up and reverses up.
Yes, sir, ski. Okay, now so what you said is correct, but I'm gonna move it from like an A minus to an A plus plus plus. You know what I'm saying? So
Okay.
Scrunch your screen horizontal real quick. I'm gonna show you something. Horizontal, so sideways.
This way?
Yeah.
This way.
So I want you to see something. Stop right there. So I want you to see something. Remember how we talked about not only is it lows, but it's relatively equal lows. So exactly where your mouse is, right? Does that low point not match or
It does. It does.
so then what you would want to do is you want to draw it from that from both of them. I don't know why I can't talk right now. So you want to be able to draw your sell side liquidity from the start of those relative equal lows, because that right there is going to give you a stronger indication why price is moving in that direction.
Yeah.
Make sense? So again, little things like this,
yeah.
it's going to give you stronger confirmations on what you're looking at, and it's going to increase your confidence in your trade idea. So for me, anytime I see equal highs, equal lows, I'm already knowing. I'm like, oh yeah, let me get a heat. You know what I'm saying? Because I already know what's going on. You feel me? So that's why when I see that, I'm like, okay, bet. So yeah. So now that you have that, show me another example.
I'm gonna just go with this brother over here. We got one over here.
Okay.
Same
Talk
thing.
to me, man.
Same thing going on.
Talk to me. What's going on? What's going on? What we
got
got? What's
that
on the
thing,
menu?
yeah.
What's on the menu,
We got
gang?
that's it.
Okay. So
They
keep
really
in
not
mind.
even-
So keep in mind, you always want to go from the lowest wick.
Yeah.
Yeah, there you go.
Yeah, I'm fixing that up. We
Yeah.
got
Oh yeah, for
right
us.
here.
Oh yeah,
Right,
for us.
right here, we got some more BS going on. We got we got some more, hey, we got some more cheese. We got some more cheese going on.
Oh yeah, hit
So we
that.
got our low. We got our lowest point down here.
Uh-huh.
Short, whatever low. Price goes down here. Gets liquidated, and then the market goes up. Starts.
So yeah,
It
so
starts to.
so yeah, my fault to cut you off. This is what I would do. That low point right there, drag it further to the right because I'm gonna point something out to you. Yeah, right there. Drag that to the right. Keep dragging that to the right. Yeah. Keep going. All right, stop. So what you said was 100% correct, but this is the reason why I said you don't always want to jump the gun when you see a liquidity sweep. Notice how price liquidated that area 3 or 4 times actually before it started going up, right? So one thing that you can do to confirm your liquidity sweep is by waiting for that market shift. Now, again, I'm going to go over this further in the future because right now I just need you guys to be able to identify what's going on. But I'm going to clap it up for you right there because you know what I'm saying? That's it. That one can be a little bit harder to kind of identify starting off. So for you to be able to pick it up, that's a dub. You know what I'm saying? So I'm proud of you, bro. All right, bet. Let's see. I have something else on here. This is for you guys. Okay, so we talked about that. Okay, bet. So yeah, you can stop sharing your screen. I actually think we might stop right there. The reason being is because I think you guys are actually starting to get a good idea of what's going on right now. And I want you guys to be able to build on this before I start going further in detail. So I have like part B that I want to introduce you guys to, but I think where you guys are at right now is pretty good. We're making a lot of progress. So the homework I'm gonna give you guys for today, I want you guys to find me 2 examples. So it has to be on a pair that you did not use today. So for example, or that I used today. So I used Nas, Benny used gold, and and then Abel used US30. So you guys have to pick any pair. I don't care what it is, but I need an example. I need 2 examples of buy side liquidity reversing to go bearish, and then I need an example of, or 2 examples of sell side liquidity reversing and going bullish. Okay, because this is gonna help. This is really gonna help you guys come next time, because I'm gonna start going a little bit more deeper with this liquidity so that you guys understand what is a valid liquidity sweep versus what's just some cheese. You know what I'm saying?
Okay.
Bad that. And as always, man, you know what I'm saying? Gasser! You know what I'm saying? Bro, that's just so fun to say. I don't know why, bro. This nigga be coming up with like the most catchy lingo. But yeah, you know what I'm saying? Proud of y'all boys, man. Pat yourself on the back, you know what I'm saying? Pat yourself on the back. We making progress, yes sir. Yes sir. Hey, so we gonna pick back up on what's today? Thursday. Today's on Thursday. We gonna pick back up on Sunday. You know what I'm saying? Let y'all rest for the weekend. Tomorrow, what I would encourage y'all to do, just open up y'all chart after the market closes, so nothing is like moving. So that's like 5-6 p.m. and then just start looking at the chart and just start finding 2 examples. And then Sunday when we come back, we're gonna go over this stuff and then make sure that you guys have a solidified foundation, because I really want to like increase y'all learning curve. So because I'm at the point now, like I feel like I've made all the mistakes, so if I can just help y'all not even know what those mistakes are or how to look out for them, then it's gonna just, y'all gonna do better than me way faster than I did.